It's time for the 5 today. On the show, we're talking about online Forex trade. And so these are some 5 things we believe you need to know about the trade. Forex trading is, what is it? Well, it is the buying and selling of currency at the international market. So here's how one makes profit, similar to other businesses, by buying the currency at a lower price and then selling it at a higher price. It is therefore dependent on the ever-changing exchange rate. The trade has opened up to individual retailers and has picked up in Kenya significantly since 2017. Following CMA regulation, and Kenya is now the 3rd largest Forex trading market in Africa after South Africa and Nigeria in terms of number of traders and trading volume. The CDSC estimates that the net asset base of online Forex brokers is over 300 million shillings. Now, of the 1.3 million Forex traders on the whole continent, Kenya accounts for about 70,000 of them. Now, of course, the next question is who regulates them? Well, the Capital Markets Authority has been regulating online Forex trade for about 4 years now. The CMA passed its regulations on the 25th of August 2017 to safeguard the traders in Kenya. Ensure the broker you choose is licensed by the CMA. Why? It's helpful in case of any complaints or fraudulent practices. Now, there are about 4 brokers, I think 5 actually, regulated in Kenya at the moment. Among them, companies like Pepperstone Markets, Scope Markets, and EGM Securities Trading as FXpesa. We have 2 of those here on the show this afternoon. So, how do you get started? Well, here's a list of what you need to do. First is obviously to select a broker and make sure it's one who's regulated by the CMA. Also, consider other factors such as their cost. Remember, they each charge you a cost for the service that they provide. It's called a spread, and this depends on the type of the account that you have with them and the different instruments that they will use. You also want to consider the minimum deposit they require, the type of accounts they offer, and the tools that they use for trading. So once you've selected your broker, you then open an account with them, you make your deposit, and then you download the trading platform and you get started. Now, I know it sounds easy, but we'll talk about it a little more. Forex trading, as you know, here's another thing. It's about managing your risk. It is a risky venture. Just like any other business, there are many factors that determine the exchange rate of currencies. So you need to be aware of brokers who offer very handsome guaranteed returns. The general rule of thumb is don't invest more money than you're prepared to lose. Now remember also that currency exchange rates are highly volatile and unpredictable. Now, some experts have said that up to 60% of traders lose more money than they gain. Now, whilst the online Forex traders and the trading seems lucrative, especially now during the COVID-19 pandemic, I'm sure you've seen the ads popping up just about anywhere online. There is still a lot to learn about how it actually works. As we've already said, deal with a licensed regulated broker, beware of the risks, but don't let that discourage you. You know what they say? The higher the risks, the higher the return. But it also needs to be an educated risk. That means you have to understand the market. So don't only depend on your broker's advice. The Forex market is open 24 hours a day, so you can also monitor the exchange rates for yourself. Now, we're told that one of the ways to start learning is by operating a demo account before you begin trading with actual money. So the basics of everything that we're talking about today with online Forex trading is this. Do your homework. That's the 5. All right, so welcome back. Let's now get into the discussion on the show this afternoon. Like I said, my guest, Peter Onyango, Principal Specialist, Risk and Stress Testing from the CMA. Thank you very much. We also have Kenneth Waiganjo, Acting CEO, Scope Markets, and Samuel Kiraka, who's the CEO of EGM Securities. I think the best place to begin, gentlemen, is with the regulator. So since 2017, it actually looks like it'll be, what, the 4th anniversary in a couple of days. So talk to us about, the regulation, the need for it, why you came up with it, and why so few have been registered since 2017.
It all started by a demand from the public. The regulator noticed that a lot of people were actually trading on online Forex using the online internet-based. So it was a feeling that this is something that needed to be regulated. So it all began with a change of the Act, the CMA Act, to allow online Forex regulations, and then a lot of stakeholder engagement so that we can see how we can put it in regulation so that you can, when Kenyans are trading, they're trading in an environment that is safer than actually just trading with unlicensed brokers.
Okay.
So when it started, immediately the regulations came out. We actually had an application, and that was now EGM Securities, and they got their license and people started trading. After that, now other brokers came in for applications, and now they are licensed. So far we have around 4 brokers that are regulated, and those are the ones that we'd like to encourage Kenyans to actually trade through, because that is where now they have protection from the regulator.
Okay. What you've talked about, it's a global market you're dealing in, because basically, and correct me if I'm wrong, Kenneth, you are buying currency. You don't own it, but you are trading in currency.
Yeah, you
trade.
Ideally, you trade on price.
On price.
Yes.
That is the exchange rate.
Yes.
So what are some of the factors that affect that exchange rate and therefore would affect one's returns?
So basically, you look at things like what's happening in the world. So in the last 3-4 days, we've seen the Taliban advancing on all major cities in Afghanistan. That, for example, would have an impact on global oil prices. Now, what happens is foreign currencies are ideally either they work in tandem with a currency, or they work vis-a-vis a currency. So, for example, you'd find anyone now who is interested in gold then would now look to buy something to do with oil.
Okay.
So that shift then means there's an expectation that the prices will go up for oil, and then the interest in gold, for example, will go down. Mm-hmm. So that's the main driver. Also, you have to look at global markets. What has happened in the last... we've been talking of global warming. With global warming, then obviously there is a drive to green energy. So you find stocks that are green energy driven are very popular. In fact, you find anyone who's working on green energy is also working on certain elements that actually bring up, they just need to have something that allows them, allows the so to speak, the client or the trader to see that they are a green company, and suddenly their stocks have a great interest.
And all of this, you're talking about gold, you're talking about oil, you're talking about green energy. The reason they affect the exchange rate is because the global buying, purchasing or trading
That's where the investment is going. Right. Yes.
And they use dollars.
They use dollars.
Yes. So that obviously
But we have to consider other currencies. So, for example, in Europe, obviously the euro is very strong. But we've also seen a resurgence of the pound since the Brexit. Yes. Okay. So the pound, I think around the time there was Brexit, it dropped to about 128 shillings. Right now it's up there at 150.
Yeah.
So that is because as for Kenya, since we are a big partner with the UK, then there has been that demand for pounds, such that whoever was holding euros still needs to buy pounds.
So, I mean, unlike all of the other investment types that we've featured on this show, with treasury bills, treasury bonds, and stocks and securities, there seems to be quite a great responsibility, or greater, shall I say, on the investor with this one.
Yes. Actually, we call them traders.
Yeah.
Because you're looking at the price movements, and then you're taking decisions.
Okay.
Do I get in now? Do I wait? And luckily for the products we offer, because they're contracts for difference, you can even enter as a price goes down.
Okay.
But now you'll enter as a sell. and then when the price hits as low as you anticipate, then you can buy
some more.
Yes.
Okay.
No, that's the point. Now you say you buy, so you'll still make money.
Oh, I see.
Even when a stock or a CFD is going down. So the whole idea is the decision is on you. So you do your research. We do offer, as he has said, daily webinars. We offer information around what's going on in the global markets, and then you do make the decision to enter and to exit.
Yeah, so the decision would be, I would call you and say...
No, we actually, on the platform, it's a click of a button, yes.
So,
close,
so
open, yes.
Call, which is click of a button
yes.
for, you know, that is where
you don't
decisions
call.
are made. Yes.
You actually do it on our platform.
Everything happens online.
Yes.
And still the same question from the same individual says, I would really wish to understand how it works. A bit of tutorials capped with induction and pragmatism will offer a great platform for me to step forward, which I think is something both you and Kenneth have said, that before anybody begins, you do the training. In the brief explainer I did, I talked about a demo account.
Yes.
Do you have that? And
yes.
So tell us. So I would then go on that and start to play around with it without actually putting money in, right?
Yes. Okay. The demo account actually has what some people would call monopoly money.
Okay.
So you have $100,000 with which to play with. So as you learn how to trade, then you go in and make a trade. You buy, you sell, then you actually see yourself making the money, and also you see you learn your lessons.
Okay.
Yeah, perhaps you got out too quickly, and then the market still was favorable, and those are the kind of lessons that you end up learning. We give you that demo account for long enough.
How long?
We look at about 30 days.
Okay. Okay.
Which and we have training on a daily basis.
I see.
Yes. So Monday through Friday we have webinars, and after that then we also have specific training for, depending on the level you're at. Are you a beginner? Are you intermediate? Are you an expert? We have training around that.
Okay.